Morning traders, or I'm sorry, good afternoon traders. And let's get started here. So this is a webinar with a new trader we've onboarded here, Jackson Hunter, trading stocks, and very interesting strategies here with just two stocks, GME and AMC, which have made tons of headlines for all sorts of reasons over the last I don't know, year and a half or so. Get your questions in. We're going to see what Jackson has to say, and then go through the uh, questions with him, and a little Q&A session. He's a musician, skateboarder, YouTuber. He's been writing, performing music for over 20 years. Opened for artists like Big Sean, Yelawolf, Machine Gun Kelly, The Game, Griselda, and more. Recently, has been covering AMC and GameStop stocks via YouTube. A true advocate of socioeconomic advancement. He wants every individual to have the tools to upgrade their life situation, no matter where they're starting from. And I have his information here. I'll be putting this into the chat for you. So you have his YouTube, his Twitter, and also his Discord here if you want to reach out to him on our Discord channel or on his Discord channel. Yeah, let's get started. Let me start displaying his screen, and then we will get rolling here with the Q&A session. All right. So let's see here. Yeah, looks good. So
right.
go for it, Jackson.
Thank you so much, Bruce. I appreciate you guys for having me, man. I gotta say off the bat, I'm not a trading expert. I'm just a guy that believes in advancing your life socioeconomically, and the stock market for me has turned out to be the best way to do that. And I've tried a lot of ways. I became immersed into the AMC movement specifically in February, so 13 months ago, and it's been a very gnarly ride. I'm from California, so I talk like a surfer, but I don't surf. But it's just been an insane movement. I'm sure you guys are aware. And a lot of people believe that it's manipulated. Some people have other beliefs on it. I have my own, and it's all based on just countless hours of research on the stock. And um, I think of AMC and GME as the same stock, different ticker. They have very similar movements over the past 12 months plus. And that's what I cover on my YouTube channel. You can check it out. It's just Jackson Hunter, no spaces. Subscribe to that. I do daily updates. I used to live stream more than I do now, but it's kind of more just a waiting game with these two stocks in mind. And by the way, I'm not a financial advisor. This is not financial advice. Please do not make investments based on what I say. But I really appreciate you guys having me here. The Bookmap is super awesome. You can't see the stuff that you can see on Bookmap on TradingView or a myriad of other platforms for that matter. So the very fact that you can zoom in and you can see transactions happening at the millisecond, if not nanosecond level, it keeps up with high frequency trading to a great deal, which is in my eyes unprecedented. And bear in mind, I've only been investing for a year and a half, or I've only been trading for like 18 months. But I've just never seen anything like this. So I love it. And the dots remind me of Dippin' Dots as well. So that's always cool. Um, but Bruce, if you want me to get into TA, I can do that. Or if you guys want to ask me questions, I can do whatever you guys want.
Yeah, I'm thinking. Let's see if there's any questions here to begin with, and then I'm just thinking we're gonna, I'll start asking you questions, and you start to go through what you're looking at, and what you find interesting here, and take the
For
discussion
sure.
forward.
For sure. My perspective is probably going to be a little unorthodox compared to your traditional investor because My price targets are quite high on both these stocks, but you know, it, it's still the TA still works until the squeeze happens. Once the squeeze happens, the TA is pretty much out of the window until it has established support and resistance levels and all that sort of stuff. But and we can look at Mullen too. I'm playing options on Mullen and BBIG. Mullen had some really interesting price movement today. I think it did two bull pennants right after another. But yeah, let's open it up for questions, man.
Yeah, I mean, so like when you're like GameStop here so today it broke below 100, and uh, kind of trickled on down to about 93 and a half, or 93, 35, as you can see. But how did you? Well, first off, maybe we can just start with the backstory, which is fascinating in itself. Like, how did you come across looking at these stocks? Like, and this got you involved into the stock market.
Yeah, for sure. So I was just trading. I got my introduction to the stock market with options, so I just jumped in and I really had no idea what I was doing, but I learned a lot. I joined a Discord, speaking of Discords, and it was like $8 a week, and they would give us trade ideas, and they taught us a whole lot about options. And so that's what I learned from the jump, the options game. And then let's see. So I did that for a few months. I lost a couple $1,000s. It's called paying your tuition. Everybody loses money at first. And then I transitioned into trading mainly shares. I still like options from time to time, but it doesn't make up 100% of my portfolio like it used to. But I transitioned into trading shares actually like right before I got into AMC. So January 2021, last year. Um, and I had call options on AMC when the securities were PCO'd by more than a dozen broker dealers. So I had a small position. I had a couple call options. I didn't have shares at the time. And then when I heard news of the PCO, which for anybody that's not aware, it's position close only, which I wouldn't expect you to be aware of that because it doesn't happen a whole lot. And it was like the first time to my knowledge, that somebody took the buy button away, only the buy button. It wasn't halted completely. It was only one side of the trade was taken away. And I was by no means a professional in the market at all, and I had very little understanding of how it worked. But even I could tell that, I mean, dude, that's just a slap in the face to the little guy, to the retail investor. It's blatantly corrupt, and I won't say criminal because that's not my role. I'm not a judge. That's not what I do. But that's up to other people to determine that. But as soon as I knew that they took the buy button away, I went, people are going to be livid about this, and people are going to jump into this stock even more than they did. And by the way, in January, there were only, what was the number? It was something insane. There were only like like 10,000 Robinhood accounts that held GME in the beginning of January 2021. By the end of the month, there were 900,000 accounts just on Robinhood holding GME. And so it 90x'd in less than 30 days. So like just a tidal wave of retail investor buying pressure, and then the SEC concluded that it wasn't a short squeeze. They even said it wasn't a gamma squeeze either. It was just organic buying pressure, which is pretty fascinating if you think about it, because it went from about $20 to 500 intraday on January 28th. And so, yeah, Bruce, I can talk a lot, but I'll just keep this one short. It was the most blatant form of corruption I'd ever seen in my life. And then I started seeing on the news and on Twitter, and even like big name celebrities, they were talking about it, and they were pissed off, and everybody was pissed off except for the rich people. And there's this misinterpretation of, I'm part of the ape movement, right? And there's a lot of misinterpretations that we're a cult and we hate rich people and and all these like ridiculous things that are not true. And like if anybody sat down with me for like 10 minutes, you'd realize I'm just a normal dude trying to get ahead in life. And that's the entire ape movement. It's as simple as that. But people thought it was this and that, and it really wasn't that. But I saw what happened and I thought, this looks like a great investment. I bought in when it was at $5 a share. I mean, I didn't see theaters going away, especially the number one theater company in the world. So I saw a super advantageous risk to reward profile on this stock, better than one I'd ever seen in my life. And I'd been in some pretty big plays before that. Like Prague was a pretty no-brainer. I hit BBIG recently on one of its recent run-ups, but the risk to reward that I saw was, well, you're losing $5 a share in case they go bankrupt. The reward is maybe the MOAS happens and you become wealthy and you get to do what you want for the rest of your life. And that's everybody's goal, right? Some of the guys listening might want to trade for the rest of their life. That's not me. I don't. I see trading as a way to acquire money to free up time to do what you actually want, or at least what I actually want. So, yeah, I bought my first shares of AMC the middle of February, and then I uploaded a spontaneous technical analysis video on AMC February 27th. I'll never forget the date. My girlfriend was having a drink down the street at a bar. I'm sober, so I don't drink. So I was just home and I was cooking dinner and literally by the time the I was cooking fish in the oven, by the time the fish had come out of the oven, the video was done, it was uploaded. Like I didn't think much of it at all. And the next day I woke up with 6,000 views and I doubled my subscriber count. And before that, like nobody knew who I was on the internet. And then I just made daily updates and my life has been a movie ever since.
Oh my God, that is a Hollywood story. You're from LA, and it has to deal with a theater stock. Uh,
Yeah.
yeah, yeah, nice combination there. Yeah, guys, if you have any questions, get in here and ask away. I have plenty of questions for you. I mean, we can just do the whole session here. I'm just really curious that so you got involved into this stock. You also got a lot of support and feedback
Yeah.
from the videos. It's just like, okay, well, let's just do more of that. But what's really curious is now in the bigger picture, this has been your kind of foothold into looking for this again and again. So now you're starting to now you're not looking at two stocks. Now you're looking at other stocks and you're looking for similar patterns.
Yeah. Yep.
Yeah, that's fantastic. I mean, so what is it exactly that you start to kind of look for in general, like these other two stocks that you're talking about?
Yeah, that's a phenomenal question. So I don't hold shares in any other stocks than AMC and GME, but I do play options on other plays. And I was telling my girl the other night, like all I play is short squeeze plays, and it's because like I'm not trying to day trade and like be on my phone all day, and I do other stuff, and I'm like I write a lot and like this is just not it's not a stock trading is not a passion of mine. It's fun and it's a good thing. It's fun to learn and I've learned so much. It's insane, but there's other things I'd rather do with my time, and so I'd rather bank on the short squeezes and just get out of the market and move on with my life. So what do I look for? So recently I just mentioned I played Prague and that was a big squeeze. Made very good percentage gains on the call options on those. And then recently I'm in Mullen Automotive, which is an electric car company. Very I wouldn't say they're new, but they're new as in I don't think they've made a single sale. So kind of how Tesla was a few years back, or maybe a decade back, whenever it was. And then I'm in BBIG, which is Vinco Ventures, which is kind of like India's version of TikTok. And they're waiting for a an interesting situation with that. I don't really need to go over that. Like the cryptide dividend, it's a interesting thing going on. So what do I look for? It's funny. There's another guy in the AMC community that has like a mathematical formula to look for short squeeze plays, and if it checks all the marks, all the boxes, then there's a high potential for a short squeeze. And I don't remember it off the top of my head, but a lot of it has to do, like for me, I will look at sentiment online. So I'm very into psychology, and it's trend based trading. And when I say that, I'm not talking about uptrends and downtrends. I'm talking about trends on the internet. Like that's where we are evolving to. AMC and GME were arguably the first ones after Roaring Kitty, Keith Gill talked about it on his YouTube channel. It created this stampede of retail buying pressure, and so that was a buy off of an internet trend. And we all know that once something gets trending, it can go viral very quickly, and the whole world can know about it. And so honestly, the main thing I look for is social sentiment via online mediums like Twitter and Instagram and Reddit as well. And you can almost get a you can like feel it when people are about to go heavy into a stock, and then there's also that adage where it's like add when sad and sell when everybody's super happy and exuberant and celebrating. So you got to be careful of that as well, because people can get too excited and they think there's more room for it to run, and then it just crumbles from there. But yeah, I look for sentiment online. That's a huge thing. But like technically speaking, and I have learned a lot about the stock market, which is might surprise some people as well. I've gone down too many rabbit holes and I really wanted to. But so short exempt volume is like a gigantic one. And the short exempt volume on Mullen was insane recently. And then so what day is today? Today's Friday. Every day feels the same for the last 13 months. So last Monday, Mullen's transactional volume was over 600 million on the day. Now there's only 35 million shares outstanding. So it it traded the total shares 17 times over in one day. And if there's somebody in this room that can help me understand that a little bit better, because honestly, I can't explain that happening without the existence of synthetic shares. And then the very next day, it did over 500 million. So that was over 14 times the shares outstanding for the whole company were traded one day. And then every day since then, it's traded the shares outstanding multiple times. So, which proportionately to AMC's bump, I like to call it, in January 2021, I think they did 1.25 billion volume in one day, which that was multiple times the shares outstanding as well, but it wasn't 17 times. So, I look at that as a sign that there's probably naked shorts. I mean, I'll just say it. And there, like, this is something that if you've been in the stock market long enough, you know that naked short selling goes on. You also know that people just tend to look the other way, and fines are a slap in the wrist, and they're a cost of doing business. That's just that's just how it works. And so I also look at failures to deliver. So I look at failures to deliver. I look at short exempt volume. I look at short volume as well. Just short percentage of the float. If it's stupidly high, like 25%, 30%, 40%, well, there's a chance for that to be squeezed, especially if there's high retail sentiment on it. Like I see it as two things for a short squeeze. You just need, and then you can have a gamma squeeze too if people play options. But I look for a heavily shorted stock, and then B, a what should I call it? A group a large number of investors online that want to go long on the stock. And when you have that combination, it's a perfect storm for the stock to go to unprecedented levels and to hit blue skies, which is past the highest resistance levels. So yeah, I look for FTDs, I look for short exempt, I look for short volume, I look for overall transactional volume, but most importantly, I look for sentiment online, and it's pretty wonderful the technology we have. I don't know how long FinTwit is what they call it, financial Twitter, has been around for, but before that, you kind of you had to do a lot of more guesswork. Now you can go on Twitter and you can just search dollar symbol Mullen, and you can see what people are saying about it, and you can look at the top ranked posts. So we have so many tools under our belt. It's pretty cool. So that's my answer for that.
Wow. So so do you have some sort of daily routine? You wake up and you start kind of just checking the internet and going to Twitter and Reddit and some of these other areas that you had mentioned, and just
Yeah.
starting to just kind of understand, like, okay, what are people looking at? What are they talking about?
Yeah.
And then look at the reaction to that.
Yeah.
Interesting.
Oh yeah. And then I mean we could talk about this forever, but like also what I've been noticing really is and there's a lot of negative sentiment as well. It's like it happens so many times when everybody's talking down about a stock and quote unquote bashing it, whatever, whatever that means. It's usually right before a run up. So like, there's always people in the world that like to be negative about things. And so when they see somebody cheering on a stock like AMC or GME or Mullen, whatever it is, Tesla, I don't care, Apple, that's also going to be met with the naysayers or the bears or whatever, and so that's also a good way to look at it too. It's not always looking at positive social sentiment. It's also looking at the people that are going, oh, you guys are a bunch of clowns, that stock's not going to hit it. They were saying that yesterday about Mullen. Today it's up like 30%. So it's more just like the number of mentions on social media total, good or bad. And when you get enough eyes on something, it brings money into it. And if you have enough buying pressure that's specifically routed to a lit exchange and not a off exchange, well, then you can get some pretty good price action. Uh, but yeah, for my routine, you know what? Dude, I don't even wake up at the bell anymore because I'm these are swing plays, right? So I have alerts set on my phone, and I don't wake up at 6 a.m. I used to do like bell to bell, but no, I have alerts set on my phone, and if it goes off, then I'll wake up and I'll pay attention. But for me, these are weeks to months long holds, so there's no reason to be watching the minute by minute candle. That just, I'm not day trading a lot of these things. So yeah, my routine is. If I wake up, I'll check my TD Ameritrade account, Thinkorswim, and maybe take a glance at what's going on. But I really just rely on the alerts. And then Twitter, I go on Twitter. I've been going less on it recently. It can be a terribly toxic place. But I'll go on that and I'll sweep and see what people are saying, and I go on Reddit as well every night. And I mean, I don't do this anymore, but like all of last year, I would spend 8 to 10 hours on Twitter and Reddit per day, just researching like what's going on, and then also learning about the stock market too. I did so much learning. I mean, it's like insane. My college degree is in music, but I feel like I deserve a bachelor's at least in stock market corruption when this thing is all done. But yeah, man, I just wake up, and if the alerts hit, they hit. If they don't, then I just keep it moving. And I know not to play near term options, so there's no reason to be looking at the short term game.
Huh. So so it sounds like there's some sort of threshold that you're looking for from social media, and then you're gonna dive in and kind of look at the pressure, um, uh, that you can kind of get a feel for,
Yeah.
from social media. um, and then what I'm curious though is, like, you mentioned something interesting, that is just, you're looking for just news on anything. When do you know, like, what to do with it? Like, are you going to short it? Are you going to go long with it? Or, and how long do you want to, how do you determine how long do you want to hold it?
Yeah, for sure. I feel more comfortable going long. I've actually never shorted a stock. I've played puts, but I've never actually shorted a stock. So I go long, and I go long. So just for example, um, man, Mullen was trading at $15 last November. So it went from $15 to, it hit a low of about 54 cents 2 weeks ago. So I mean, nearly went bankrupt. Like, that's just an insane decrease, percentage wise, and but then the volume just came out of nowhere, and so I saw that the price was basically bottomed out, and then this volume came in out of nowhere, and I'm so that's what tripped the alarm on that one. I'm like, wait, what's going on here? Why is there so much volume if it was just shorted to hell for the past 4 or 5 months? Where is this volume coming from, and why is it coming in? And then you look at it and you go, whoa, the FTDs are off the Richter. And then you look at the short exempt volume, and they're like, the short exempt volume, I could be a little bit off on this, but for one of the days, the short exempt volume was more than the shares outstanding for one of the days. So honestly, I don't. Again, I'll admit ignorance all the time. When I don't know something, I don't know something. And so, but to me, when the short exempt volume is more than the shares outstanding, there's something going on there, and it's short exempt for a reason, because somebody or some entity doesn't want that stock to fly. So even when it's on the SSR, the short sale rule, they're just bypassing that with short exempts, and you can. It seems like you can qualify anything as a short exempt. So yeah, that is what drew me to Mullen recently. It hit 54 cents, but then all of a sudden, this volume that wasn't even comparable to anything the stock had ever seen came in, and then that led me down to, okay, what are the FTDs? Um, and usually, when there's a lot of FTDs, there's a lot of shorting going on. And when there's a lot of shorting going on, some people, especially recently, I think it's become like more of like a thing to do recently, is to find these short squeezes. There's tons of people. There's a whole subreddit called Short Squeeze, and on Reddit, and so uh, people look for opportunities, and when the FTDs don't line up, and when the numbers don't line up, well, that's when I'll go long. And it's like investing in anything. It's like taking a risk on anything. I don't know if I'm gonna make a killing on a play. I don't know if I'm gonna lose my entire investment, but that's why I don't do near term options. I buy them at least a month, 2, 3 months out. Um, yeah.
Okay. Do you go out to leaps? Do you go out to maybe a year or more? Or I mean, I guess those get just as expensive as the underlying, basically.
Yeah, you know what? If I had more capital, I probably would go out further. I probably would do a leap like 2023, but um, no, I for like Mullen and BBIG, I've got a couple that are expiring next month, but I've had them for a few weeks now. And then if it doesn't hit when I think it will, I'll just roll it out until it does. And that's how I'm playing it.
So,
And
I mean,
yeah,
like, with this kind of volatility, I mean, this is insane. And
yeah.
I mean, like, we have a J Trader, a stocks trader, who does Wednesday webinars for us, and he's been saying some of the same things of, like, yeah, the float on this is 50 million shares, but it just traded like 300 million this morning, or something like this. And uh, it's just, I mean, we've never seen this before. and it's insane. And you know, so basically you start to see this kind of activity. You're starting to evaluate it, and then but how do you know like when to enter and how long to hold?
I enter right when I see something unusual, like like the stock was traded 17 times over in one day. That's when I enter. So my buddy Unusual Whales on Twitter, I'm sure some people are familiar with him. He provides data analytics. When something looks super unusual, that's when I enter. And how long do I hold? Well, know, uh, that could be based on a technical level. That could be based on a percentage profit that I would like to make. That could be based on volume as well. Volume is a key indicator, but it's also um, you have to look at many things, right? As we all know, you have to have confluence. You have to have many points. So just because it traded at 600 million volume last Monday, that doesn't mean that they closed all their shorts by any means. So you got to keep looking at the FTDs and the short exempt volume and the short volume, and then look at the institutional filings with the SEC and see what's going on with that, and see which institutions are going long, which ones are going short. Um, and so it's pretty interesting because, I'm a retail investor, obviously, but you're also starting to see institutions go long with these squeeze plays. So it's really interesting. To me, it's the first time that big money has ever followed dumb money, as they call it, retail investors. So, it's a really interesting time in the stock market. And I just, I pick the time that I go in is when I think something is super fishy. And if I'm wrong, I'm wrong. And if I'm not, then I make a good amount of money. And that's all it is.
Wow, wow. um yeah, yeah, I mean, this is just like kind of from a foreign planet. To hear, uh but it makes so much sense though. That you talk about a momentum play, but it's momentum, like you said, of the internet, and what's going on over there, and like what is reading the sentiment and feel from the internet, and then looking upon like, okay, well, how can I benefit from that? And I mean, imagine this could work for anything. You're going to probably get the quickest and easiest bang for your buck right here in the stock market, like you're saying. But yeah, this is. Have you ever kind of looked into any others type of plays like beyond stocks or options?
Outside of the stock market, like
Yeah,
real
I'm just
estate
kind
or
of curious.
something.
Yeah, like maybe real estate, or like maybe like the whole move in commodities now, and I mean, I guess you can always go with the ETFs, of course, and find some sort of way in the stock market to trade that. But um, yeah, I'm just kind of curious, like what I maybe you can even kind of show us a little bit, like like, well, I visit here, I'm looking at this here, I'm filtering for that there, and Twitter. I mean, this is your proprietary method, but it's just so interesting.
Yeah.
Yeah, it's yeah. We're all like doing these incredible volume studies and looking at this or that, but here, like, you just have a very different kind of outlook and bigger picture approach.
Oh, for sure. Yeah, and that's why I said, like, I'm sure you guys will consider this unorthodox, and um, some people might say it's risky, but my ROI last year would say otherwise. Like, that's the funny thing. So many people said the apes were losing money. Like, you guys are gonna lose all your money, but my ROI was, I mean, it would put pretty much every hedge fund in the world to shame, and a lot of my peers did the same thing. And I started with very little capital, so it didn't advance me that much socioeconomically. But I mean, if people want to compare ROIs, a lot of the apes, whatever you want to call them, we're just retail investors, did extremely well, especially if you played call options. I mean, AMC went from $8 to $77 in the June run up. And, I had, for example, I had June 18th, $40 calls. And so, just for an example, I turned uh, $390 into 15,000 in, like, I don't know, a week. And I bought 10 contracts at 39 bucks a piece, and then I sold them for roughly what a used car goes for each in LA. So if you played options, sure, the stock was not as high as it was in June, as at the end of the year. But if you played it smart, a lot of apes made a killing. I mean, so many, man, we could talk forever, and I would love to, but so many of my viewers messaged me and saying like, thanks, Jackson, I just became a millionaire. I mean, I got that at least over 10 times last year. And it wasn't me doing anything. I just report. Like, I don't do anything special. I'm like, I literally say I'm an idiot, dude. Like, I don't really know what I'm doing a lot of times. But my point is that a lot of apes made life-changing money. A lot are still holding as well. And as far as like, do I use this in other areas of investments, or do I invest other areas? I don't have enough money to buy real estate at the moment. I live in LA, so the cheapest house here is 700 grand. So I don't have enough money for that. I still live in an apartment. And but let's see where, I mean, I've traded crypto. I used to trade Litecoin frequently, like every weekend. And then, um, no, man, other than that, I've really just been holding AMC and GME, and then I play options on squeeze plays, other squeeze plays on the side. I can pull up Twitter if you want me to show you like kind of what I look for.
Yeah, I mean, it would be fascinating, to be honest. I'd love it. Yeah, and you know, yeah, people get your question traders get your questions in here for Jackson, and
There we go.
yeah,
It's like, it's not rocket science. My dad's a rocket scientist, literally, but this is not rocket science. So just the first thing that I see right here, you guys can see that, right?
yeah,
So,
yeah.
so just the first thing I see right here, trending AMC short squeeze. And then obviously Russia and Ukraine, which is sad as hell, but that's life. So, and AMC has been trending. I mean, I'm not making this up. I'm not a hyperbolic person. I'm very like straight up and literal. AMC's been trending since last January, like for 13 months. So I'll just go over here and let's just see what people are saying about Mullen, because Mullen was up over 25% today. And so this is a buddy of mine. He's an ape, very good trader himself, and another couple K into this, help get that push to $1. And so that was kind of the price level that a lot of people wanted to get to today. So you don't even, it's insane. You don't even need to like pay for these discords or like anything like that. People chart it for you, and you can look at it. And not everybody is somebody you want to follow, right? But as you can see, this gentleman obviously drew an appropriate downtrend. It touched once, twice, three times, four times, five times, and then the breakout right there. That looks like it's on the probably 15 or 5 minute. So Mullen confirmed. You just look at, and then this is, business fundamentals. These are what the cars look like. Has the best EVs hands down. And obviously this is all opinion and it's speculation, but what's not opinion and speculation in the stock market? This is also a good friend of mine. I've actually met her in person. Lovely lady, Ape. And so these are the top posts about Mullen. To the newcomers, yes, Mullen is real. Here's proof, contrary to what FUD bears have been spreading to you. And then just stuff like this, like memes hold the line, and you just look like how many likes it's getting, and it's like, oh, there's a ton of freaking people that are just holding that thing. And then like, let's see what they're saying about BBIG. Well, actually, uh, all right. I go to BBIG. Let me see. Those are just the top posts, but you can sort it by the most recent. And like right now, I think it's making a bit of an after hours move. So you can look at Mullen target. I don't look at price targets. I think if you're looking at a price target, it just means you haven't researched the stock enough. That's one of the things I've learned. So you can sort it by latest, 33 seconds ago, 38 seconds, 1 minute, 1 minute, 1 minute, 2 minutes. So there's a lot of posts about it. This guy says Mullen going stupid, rocket emoji. Did you not watch the movie The Big Short? Um, yeah, so this guy's bullish on it. You can just read bullish or bearish sentiment and then you make your own decision at the end of the day, obviously.
But what do you? I mean, you. So this is it, just in general, like this. But are you looking about how many people like it? How many people are following these people?
Yeah, sure. Yeah, so like Johnny Love, I know he's a influencer or whatever word you want to call it, and he's a YouTuber as well. So let's go to one that like it's pretty funny because after a while you learn to weed out the ones that are not as meaningful or ones that you can take with a huge grain of salt. Because Twitter loves hype, right? They love, oh, it's going to the moon, and I try and stay as far as way possible with that. I don't like to hype anything. So it if it's just like Mullen and then a rocket emoji and it's got 1,000 likes, well, those likes don't really mean anything. Those are just people that are hoping and that it goes higher. But when you have like a well written out, or like this is probably perfect. So he's got the exponential moving averages and he's got support and resistance. And let's see. Yeah, he's looking at VWAP. So this guy probably might know what he's talking about. And then you use your own judgment at the end of the day. And this guy right here, he's got facts, empirical backing for conviction. And he's talking about warrant conversion, which is a big thing. Um, so you learn pretty quickly what to look at and what not. Let's see. But the ones with the most likes, the reason why you can't just go off of likes and it's probably pretty obvious, but people love hype and so those ones get the most likes. So, but yeah, I'll just scan this and I take it with a grain of salt, all of it, but it is good to look at. And then do the same for BBIG, and I think BBIG was red. Um, this guy thinks it's comical that the shorts are trying so hard. I can already read that off the bat. Um, and then, you got all sorts of data analytics providers like, and they provide options, data right there, 119% out the money. And then Mullen is number two, 101% out the money. Um, you got support and resistance. Like if you don't know how to, you can learn so much. It's like the internet is just invaluable, man. If you pay attention to the right people, you don't need to go to college for any of this stuff. I mean, um, you can just learn so much. So like go big or go home. Like obviously that's just hype. That's just sentiment. It's positive sentiment. So it's something to keep in mind. But I like to look at more like data for sure. And then options. Let's see. So
But how did you come
uh,
up with BBIG to just to begin with?
I find BBIG. Man, dude, I'm so sleep deprived right now. I can't even remember. I found it probably 2 months ago, so that would have been January. It had to have been Reddit. It was probably Reddit. So there's a subreddit called Short Squeeze, r/Short Squeeze, and everybody was talking about it. And so when everybody's talking about something, I start paying attention. And if you're early enough, you can make money. But a lot of times people are late. So I think I just randomly came across it on Reddit, and then I looked at the options chain, which I'm doing right now, and there's just a crazy amount of options activity. So this is this is the well April 14th. So let's look at March 18th, which is obviously the third Friday of the month, which is obviously has the most open interest typically. So you got calls for $2 strike price All this is in the money. Anything under, so this expires next week. But you can see a ton of contracts: 4,000, 8,000, 13,000, 5,000, 18,000, 12,000, 16,000. So, a lot of people want it to go towards $5. These contracts are worth a buck each right now, super cheap. So these are pretty much lottos. But, if it can gamma ramp, there's no telling how high this thing can go. And then these are the super hopeful people right here. Maybe they bought a year ago, You never know when they bought from just this alone. But if you go to April 14th, the volume is out of this world. So this is next month's OPEX for the third Friday. You only have a little over 8,000 contracts in the money, but right above that, there's 10,000, then 22,000, 16,000, 36,000, 62,000. 62,000 times 10. So that's representative of 6.2 million shares that the market makers, they either have to delta hedge for or buy into 2 days after they land and expire in the money. And then obviously there's ways to get around that as well, and it puts it on the threshold securities list, but that's a whole nother topic. But so just wild volume. And then if you look at the strike prices, you start going, well, why did it go from the highest strike was $10 in March 18th to the highest strike is now $24 for April 14th? So you look at that as well, and obviously that's some of that is market makers trying to sucker people into the deep out of the money calls so they can just take that easy premium. But at the same time, this is a lot of contracts that could really push a gamma squeeze because you don't want to be a market maker or an options writer in Chicago that's writing these, especially you don't want to write them naked, and then all of a sudden they're in the money. And that's exactly what happened with GameStop and AMC and all the meme stocks in January of last year. Admittedly, they wrote all these naked calls, and that's not that's not an intrinsically bad thing to do. It happens all the time on many tickers. But the thing is, the entire options chain for GME was blue. It was all in the money. So at that point, they didn't have to halt trading. They actually could have continued. The legal documents show that, but they claimed that they had to halt trading because of liquidity issues, that they didn't have enough money. But um, that's why GME got the attention it did, because all of a sudden it was something like this, and then every single strike price was in the money, enabling the owners of those contracts to exercise. And if they were to exercise, oh my gosh, Thomas Peterfy, he's the 66th, sorry, 65th is Jim Simons of Ren Technology, a hedge fund. Thomas Peterfy, the chairman of Interactive Brokers, said it was literally a day or two after. He's the 66th richest person in the world, multi-billionaire. He said, if the apes, I'm paraphrasing, if the apes would have called back their shares, and what he was talking about was exercising the shares that they had call options on, if they would have done that, GME could have gone to infinity practically. Now that was not a paraphrase. That's exactly what he said, word for word. And it's true. There is no cap to a short squeeze, especially when every strike price is in the money. So when a guy like that, he runs a broker dealer as popular as Interactive Brokers. When a guy like that says that, I mean, but everybody else was saying the opposite. I think he was at a point where he had nothing to lose. He's made a killing, he's made a ton of money, and he didn't see any reason to be deceitful about it, and he just called it for what it was. And what it was that the little guy won, but the big guy didn't want to admit it. So I'm kind of going back to the AMC and GME genesis, but I'm happy to answer any questions, or if you want me to look at anything.
Yeah, yeah. I mean that's the fascinating part, that also kind of spurred your interest too. Like you're saying like this is just outright fraud, and
Yeah.
and just corrupt as can be, and yet the little guy, they had him. I mean, down like for the count, not on the ropes. They were down for the count, and still they got out. it was just bad blood, to allow for that. People are really upset about that. So yeah, that's yeah, stirs a lot of emotions, and gets people very interested also now this has become a thing, what you're doing with this kind of strategy. And now you're extrapolating that to other stocks, looking for this in other this is a very successful strategy. And now you're able to use it for many different stocks.
Yeah, definitely. So just like this is one of my favorite websites, stocksera.python anywhere. It's free. It's got everything you need, one-stop shop. So this is BBIG, the failures to deliver. Now you can go on the SEC's website and download them 2 weeks by 2 weeks, or you can just come here and they show you all of them. So the ones that are in red are just extraordinary values compared to the other ones. Now, if you like, it's just this is BBIG. So, and they chart it out. So the yellow is FTDs, and then the price is blue. So you can see on January 20th. I mean, look at this string of FTDs right here. This is more than 2 weeks of trading where you never had FTDs less than 1 million on the day. So a FTD, for anybody that's not aware, I'm sure a lot of you guys are. I'm sure a lot of you guys are way more knowledgeable than me. I'm just going to say that right now. So an FTD is just when the broker dealer did not locate the share, but they sold it anyway. And so you're holding an IOU, you're holding a counterfeit book entry. That's all it is. There's not an actual share there. It has the monetary equivalent of a quote unquote legitimate share, but nobody located the shares. There was no locate with it. And so, for instance, on January 20th for BBIG, 8.2 million shares were sold without even being located. So they were just like, oh, yeah, sure, here's the shares, but they never located them, which is what you're supposed to do. And so that's to the tune of $37 million worth of shares. And they were only at, 450 at the time, $4.50. So this string of FTDs, when I see something like that, and that sets off the alarm, and it's like, okay, in a couple weeks or a couple months, you could see some very big green price action because FTDs theoretically have to be delivered at some point. And then it even has the T plus 35 date over here on the right hand side. But the actors in this market have ways to circumvent that as well. So it's a squirrely thing, and what I'm doing is not foolproof by any means, but numbers don't lie. When you have 8.2 million FTDs, and then I'm not sure the float off the top of my head, but it's less than AMC, that's for sure. So yeah, I mean, you see a string of FTDs like that, it's just like, dude, like, why are there so many? Like, why could they not locate the shares? You just gotta ask yourself why. And it's, sometimes, and I learned a lot of this from Patrick Byrne, the former CEO of Overstock. Sometimes FTDs are the result of just an honest mistake, an honest error. But other times, they're evidence of straight up negligent behavior on the behalf of a broker dealer or another actor within the stock market. And when you have this many, well, if it walks like a duck, you know the rest. So, like my trading philosophy is super simple. I'm not, if you look at one of my charts, I keep things really naked. I don't even use that many indicators. I really just do support and resistance, volume, MACD, RSI, CCI, and that's pretty much it. Um, but yeah, Bruce, is there anything else you want to talk about or ask questions on, man?
Yeah, I mean, just you know, this going. I mean, I'm fascinated by this, and you
You can
know,
call me an idiotic ape, man. I've heard it before. No worries.
it's unbelievable. But like, I don't know if anyone has read some of these. They're old, very old books. Something about following the herd, or I forget. I mean, I have it. It's a very short book, but talking about the tulip bulbs and in Netherlands, and these huge. bubble markets. And this here, and looking at these FTDs like you're talking about, like something's going on here. This is not right. And
Yeah.
and
I
and
didn't mean to cut you off. Yeah.
no, no, no. I mean, I made my point, and like here, like there was someone in the author of, I forget the name of the book, but maybe someone can help out if they remember. But it went through some scenarios of some people just like some smart investors along the way, like would buy a couple of bulbs, sell them off, and they're done. Like they made a huge profit. They were able to buy a house. They're set for life um, uh, uh, by doing something like that. By just recognizing the opportunity, seeing some of the things that are happening, and here you're basically doing it digitally on the internet.
Yeah. Yeah. All I know about the tulip thing is they squeezed to ridiculous numbers. That's all I know about that. But that I just pulled up Apple to compare it. So, if you look at Apple's FTDs, which Apple has a I believe a float or shares outstanding, I think it's similar, 16 billion, right, in total shares. So the FTDs on Apple are virtually, next to nothing. On one day, there were 100 total FTDs out of 16 billion shares. And then if you go to VIG, I mean, you just got to compare it in percentages. One day it had 8 million. BBIG doesn't have 16 billion shares. So so like percentage wise it's incomparable. I mean, so I did I'm working on a write up actually. Well, it's more than a write up, but uh, I did a comparison on just like normal blue chip stocks, whatever you want to call it, Microsoft, Apple, and Tesla, and I compared the FTDs in last year, and it wasn't even, you couldn't even compare it to AMC and GME. So last year AMC had a total, and I know. Man, the internet's so funny. You say one thing and they misconstrue it for seven different things. But I know FTDs are not added up day over day, but you can still add them up, and that shows you an idea of the relentlessness of these FTDs. And so I compared Apple, Microsoft, Tesla to AMC and GME. AMC and GME, their total number of FTDs, if you added them up for last year, represented 40% and 39% of their shares outstanding, respectively. If you did it for Microsoft or Tesla, I think Microsoft it represented 0.3% or 0.03%. Apple was in the same range, about it might have been 1%. Tesla was like 1.6. And then you have AMC, which did 200 million FTDs in 2021. That's 40% of the shares outstanding. Um, so what's going on there, And then that propels you to just research until kingdom come, until you find your answer, and then you find an answer, and then you keep researching, and you're like, oh wait, that's not the answer, and they have this loophole, and oh, that's why they're, and so it's a seemingly never-ending process, which I never intended to go down. I thought it was going to be, a 2 or 3 month play and I'd be out, but it became my life, and it is what it is.
Yeah, yeah, no, it's really really fascinating stuff, and it's a phenomena happening. And you jumped on the train here. Spot is asking a question here about FTDs as predictive of price move up, or do they come after a price move?
Oh, good question. Typically, I see FTDs preceding green price action. So it just to reiterate, an FTD is the broker dealer sold shares that they did not verify actually existed. And so typically you'll see big price movement I don't know. It could be any time, obviously. I'm not a fortune teller, but it could be a couple weeks or a couple months after a large grouping of FTDs. But I mean, this kind of shows it pretty well actually on this chart. So June 2nd is when AMC hit $77 intraday, and then it closed around $62. So the FTDs are the yellow. So these actually spiked at the same time, which that can make sense as well because because as the price is going so high, and people are buying and buying and buying, well, eventually you run out of shares. So, but the brokers don't care because the brokers make money off of every transaction through payment for order flow. They make hundreds of millions per quarter, each broker dealer. So they just want the transactional volume to come in. They don't care. And so, but you can see for months preceding that June movement, look at the FTDs, which is the yellow. Very high FTDs in April and early May. And so you do a T plus 35 from these, that probably helped this June 2nd run up. And then this one's a bit of an outlier because this string of dates, June 18th to July 2nd, because there's high FTDs, but then you don't see, I mean, you had some upwards movement from $30 to like 50, but it wasn't anything like this. So, yeah, sorry if I'm going on too long, man.
No, no worries, no worries at all. Please continue on. I mean, this is just fascinating stuff. I mean, it makes these like, I mean, which brokerage is this? And they're on the hook for these things. I mean, this is like a bucket shop. Back to the bucket shop days. Back in the late 1800s or so. I don't know how they're getting away with this.
Yeah, I think it's conflict of interest. I think that's probably the number one reason. Uh, but it's complete opacity in the stock market. They don't want you to see what's going on. But I do want to say that what I'm doing, what Trey, what all the other, AMC YouTubers or all the apes are doing on the internet, we're not exposing new activity. The only thing that happened is we exposed it on a greater platform than it's ever been seen on. That's the only reason, and that's why it caused, excuse me, a global movement. So, but this type of stuff has been going on forever. If you read Flash Boys by Michael Lewis, which was, I don't know, 2014, and then he wrote The Big Short, which was about the 2008 housing market. And then if you go to Dr. Suzanne Trimbath, PhD, she wrote Naked, Short, and Greedy. That's been out. And so this stuff has been out. It's just that, I mean, man, Bruce, if I were to summarize this thing in one sentence, it would be the internet remains undefeated. That's all it is. It's just the internet got a hold of this and it spread like a wildfire. But I just want to say again, we're not exposing anything new. These, off exchange trading has been happening forever. FTDs have been happening forever. Maybe not as abusive as they are, but and then naked short selling, that's been happening forever. You can look at all the times that institutions were fined for it, but it was, they get fined a quarter of a percent of the profit that they made in the year. So it doesn't even, it's like taking $10 from a guy like me. Like, I probably won't really notice it. You spend that on a burger or like a soda at a AMC theaters or something. So we didn't expose anything new. We just exposed it on a greater level.
Yeah, yeah. No, it already existed. Yeah, yeah. And you're not only that, you're researching it, looking for it. So,
Oh my gosh, we've done so much research, way more than I ever wanted to. Like being up on the phone until 5 in the morning with guys that I just met on the internet, and I didn't even know what payment for order flow was until probably April of last year, and then I started realizing, oh, that's not good for us. They say it's good for us, but it's not. And then you can look up in 2004, Citadel wrote a letter to, I don't know if they were writing the government or who, but it was an anti-PFOF letter. but then now they're the ones that benefit greatly from it. So it's pretty funny, man. It's so interesting what's going on, and the fact that now that we have eyes on it, it's just it can put the edge in the little guy's favor, which I don't think has ever happened before. And so it's a brilliant thing. And a lot of people are excited about, regulations going forward, and maybe our kids can be able to invest fairly. But I mean, for me, I'm in and out. Once this play is done, I'm out forever. Uh, it's just I've seen too much, man. It can get pretty depressing when you realize why the lower class has been the lower class, and it's obviously a more convoluted situation than just that statement, but there's reasons why there's such a huge wealth inequality gap in the United States, and the stock market is one of those reasons.
Well, I want to respect your time, and thank you very much, Jackson. This is enlightening. I mean, I've never
I'm just
seen.
having a blast with you, Bruce. I'm
I,
just having a blast, man.
I've never seen anything like it. I can only like reach back to things like tulip bulbs and well, the stock market back in the like kind of stock options with the tech market back in 2000. But like there's some things, but this is way worse. I mean, like this is crazy stuff. Uh, and We're getting questions coming in now. Um, I don't know if you want to answer that, or you can answer them offline if you like. This is, like I said, I want to respect your time. If you're have maybe one or two more questions, then you tell me.
Yeah, let's do two more questions.
Okay. All right. So that'll work out well here. So let's see. If we get to the point, not just the point where basically all investment strategy is hoping that the SEC will hold hedge funds accountable and tank capitalism. Well, I guess it's more of a comment than it is a question. Chris is asking, though, I understand how it works with AMC example, but why does it happen? I mean, a lot of buyers got FTDs. That's why the market makers need to hedge their position. Or why does the bullish move happen?
Okay, so that's a difficult one to answer because of the opacity in the stock market. So, for example, the June 2nd run up from it went from about $8 to $77, so nearly a 1,000% move in a couple of weeks. So, why did that happen? Um, it's very difficult to tell you that because for some reason out of nowhere, volume, again, speaking of great volume, it just started coming in, and towards late May and the first 2 days of June, you just saw extreme volume. And obviously that's not retail just all of a sudden piling in. There's no way, even if they tried to coordinate something like that, it's not a plausible thing to coordinate that much volume. So that's definitely not the case. It's not retail piling in all at once. Well, then if it's not retail, who is it? Institutions. I mean, those are the only two main groups that I can think of in the stock market. You have retail and you have institutions. And then obviously you have insider buying, but that was not the case. They don't have that much money. So who has the type of money to create that volume and to create that price movement? Institutions. So, I don't know. I don't know. I don't know what causes the great price movements. All I know is that, um, in my eyes, they are likely to happen when you see um, the measurements of FTDs and short exempt and short volume and volume in general off the Richter. You're likely to see great price movement. But it's a phenomenal question, and it's something that millions of us apes have been trying to figure out. Like, okay, why on this date? We know why it happened in this doesn't show January, but we know why the January 28th move happened. We know why. That was retail. That was just straight up retail buying pressure, and the stocks were heavily shorted. And so you got all these call options in the money, and some people probably exercise them, so that just pushes it up more. So that was a retail surge, January 2021. But like the June movement of AMC and then GME has had similar movements up to 350. I can't give you an answer. I wish I knew. I have a feeling it has something to do with the algorithmic trading from high frequency trading systems because it's not retail all of a sudden like just for an example of mathematically or like numbers wise whatever I'm not like smart with math but AMC typically averages like 35 to 40 million daily volume. So June 2nd, I mean, the volume was much, 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 much higher than that. So retail doesn't have that type of money. We just don't. We make up about 30% of the market. I think not money wise, but like individual wise. But we don't have that type of money to create like 500 million transactional volume for a stock that normally does less than 10% of that. So I don't know. I don't know.
Yeah, yeah, yeah. It's a really odd, phenomena. Yeah, I mean, one more question here. Like, Spot is asking, so what happens after 35 days on FTDs?
Great question. What is supposed to happen are so, for example, this is AMC on February 14th, Valentine's Day. There were 531,000 FTDs, and then the T plus 35. So that's 35 calendar days from when the FTDs happened. You're supposed to see these 531,000 shares bought back into the stock on March 21st. It's just supposed to be delivered because it was never delivered in the first place. You were delivered something. It's an IOU. There's this semi, I don't know, for lack of a better term, semi famous quote from Patrick Byrne, the chairman of Overstock. And he's speaking to these guys in a presentation, and he goes, and it's a room of investors, and he goes, hold stocks in companies, and almost all of them raise their hand. And he goes, actually, that's incorrect. And then he goes on to explain, like in this in-depth presentation, how you actually just hold a representation of a share. You hold a IOU of a share many times. So it's just man, we could go off on so many tangents and have an awesome conversation, and maybe we'll do it again sometime. But yeah, what's supposed to happen is these 531,000 shares are supposed to be bought into AMC by March 21st. A lot of times it doesn't happen though.
Hmm. Hmm. So that's the accountability element on it. Supposedly,
Yeah.
supposedly. Yeah, yeah. Well, thank you very much, Hunter. I mean, this is really eye-opening, and I've never really come across or seen anything quite like it, to be honest. Yeah, really, really interesting stuff. And Yeah, we'll have the recording up, and people can ask questions in here. Yeah, we'll do it again sometime, and take a look more. I think maybe at some directional moves also in Bookmap, and when you can start to see some of that volume really come in, also in the daily, in the daily chart in Bookmap, and really start to understand some of it. Maybe that we can cover a little bit of strategy on that. But Yeah, other than that, since you're a YouTuber and we're starting to do a lot more on YouTube, I gotta say, like, if you like the webinar, please click like and subscribe to our channel.
Yeah, subscribe to Bookmap. They're awesome. Don't mind subscribing to me. I'm just some rambling idiot that But subscribe to Bookmap for sure, man. Bruce, I appreciate you. I appreciate everybody that's in here. I love you guys. Hopefully, you have a beautiful weekend, and hopefully, we'll do this again soon.
Yeah, thank you very much.
All right, peace out, Bruce.
Okay, take care.